Good morning, Michael Feller here. On October the 13th, you're watching Deals TV on Business Spectator, and talk this morning that British Gas, or BG Group, the international division of British Gas, which was privatised by the Thatcher government, could sell its power station assets. It has 12 or so of these things, which was left over after British Gas split into two companies, Centrica and BG Group. 3 power stations are in the United States, 5 are in Italy, and 1 each in Malaysia and the Philippines. And together they could be sold for £617 million, it's believed. That story was spread in on a blog appropriately called Spark Spread on Friday, and it got picked up by the international media over the last few days. So all eyes are on that, and it's interesting to think what could happen if BG does sell the assets. It would obviously have a lot more cash, and presumably a lot of that cash could go into assets in Australia, specifically coal seam gas assets in Queensland, which could be especially interesting if indeed ConocoPhillips sells out of Australia as part of its $10 billion asset sale program that it announced a couple of days ago. BG Group could also be targeted by Shell, BHP Billiton and others if it does sell these 12 or so power station assets. A similar situation to one that Foster's is in. It's universally seen as an attractive takeover target if, and it's a big if it can sell out its wine assets. Similarly, BG Group would be a very attractive target for Shell, BHP or another company if it could get rid of these power station assets. Also in terms of the power station game, AGL Energy could raise capital, it's thought, to develop wind farm assets as well as participate in the New South Wales power station privatisation thing. And speaking of privatisations and bringing us back to Britain, Gordon Brown has announced that the UK government could sell £3 billion of assets, including the Channel, the Channel Tunnel that is, the tunnel under the Thames, Tote, the gaming operation that's owned by the government, and 33% of Urenco, which is a European consortium for uranium enrichment. And meanwhile in the UK, Xstrata is thought to be finishing off its bid for Anglo-American, or rather canning its bid for Anglo-American. It told an institutional investor, it's reported in Reuters, that it's canning the deal. That institutional investor typically wasn't named in the Reuters report, so we can only say it's speculation at the moment, but it's been largely thought for the last couple of weeks that deal's on the rocks anyway. And Xstrata has also sold El Morro, the copper gold project in Chile, for $465 million to Canada's Barrick Gold Corporation. And indeed, if Xstrata is getting out of the Anglo-American deal, that makes Anglo-American an even more attractive target perhaps for BHP Billiton. BHP was also thought at one stage to be interested in Anglo, which is considered the weakest of the big global mining conglomerates. And in terms of that, there's an interesting rumour that BHP is looking to tap the US bond market. Why would they be looking to raise debt equity when they have so much cash, in fact perhaps too much cash on the books? Well, perhaps they're looking at a big acquisition like Anglo or like Rio, another thing which is perennially rumoured. Otherwise, BHP is looking at smaller assets such as those potash companies in Canada that we've been talking about over the last couple of weeks. On to other bond issues now. Wesfarmers is thought to be running a European roadshow for a debt capital raising. Last month, Wesfarmers raised $500 million in bonds in Australia. And also in other news today, Consolidated Media, Seven Network, owned by Kerry Stokes, is now a 20.96% shareholder in Consolidated Media. That's though only because of Consolidated Media's share buyback program, not because Kerry Stokes has actually crossed that 20% threshold. So don't expect anything new to come out of that. James Packer's stake in the company is also increased by default. Speaking of Packer, shares in Crown are up 6% on yesterday's talk that James Packer is closer to privatising Crown, the casino business. And indeed, it looks like Crown could prove the doubters wrong. Last night there was an interesting documentary on the ABC about James Packer's gambles, various gambles in business, and particularly in the gaming business. However, it looks like things in Macau are hotting up, and Crown's exposure to the former Portuguese colony is looking quite prospective, especially in line with what's happened in IPOs in Macau, or rather Hong Kong, Win Asia, the division of the Las Vegas casino group, has had a tremendous IPO. Not to say all IPOs are good, and to wrap today's Breakfast Deals TV up, just in terms of IPOs, there's the good, the bad and the ugly. In terms of the ugly, Maxis Malaysia seems to be having an ugly IPO experience. The interest in that company seems to be waning, and there's also talk of some pretty ugly IPOs in Hong Kong, Shanghai and Shenzhen coming up. However, an interesting time for Blackstone, which is looking at IPOing 8 of its private equity assets in the next couple of months. So hopefully they're good rather than ugly. Anyway, that's all we've got time for. I'll see you tomorrow.